Why pay more for your precious metals from the big guys with offices on Wall Street and who bank with JP Morgan? Get your fizz from the doc at sdbullion.com.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, Eric, this is our first show with the new release of Silver Doctors, the new Silver Doctors update, so we're excited about that. Even though it's kind of the dog days of summer here this last week before Labor Day in the markets, not a lot of excitement in the gold and silver markets. Gold continued to be capped under 1,300 this week, closing the week just under 1,290. And silver also continues to be capped under 20, but also continues to find pretty strong support around the 1940 level. Really, Wednesday, Thursday, Friday, it was attempted to be knocked below 1940 pretty much for 72 hours, and it's been stubborn and held strong above that 1940 level. Do you think we're going to see that hold here, Eric, as everybody returns to their desk after the long upcoming Labor Day weekend here?
I believe that it will hold, and if it doesn't, it'll only be breached by a matter of a couple of minutes during the course of an intraday period. And this is largely the impact of the so-called China put, where China is willing to step up and buy gold en masse, and silver to some extent as well, when prices are falling, because that gives them the ability to accumulate without pushing prices up enormously. So the comics boys and LPMA paper shooters are pushing their naked shorts and so forth, while the paper impacted prices enable China to accumulate. And this is a pattern we've seen over and over and over and over again, since basically the bottom of June 28th, 2013. And I don't see any particular reason why that's going to change. Even if one buys the stories about reduced physical demand amongst the Chinese retail market and so forth, which some of those statistics need to be taken with a huge grain of salt. The bottom line is that the level of consumption in Asia remains at levels that 2, 3, 4 years ago are much, much larger than prevailing levels that back in those days. So. And simultaneous to that, the bottom line is that China alone is roughly consuming the entire annual mine supply of gold, and it's more opaque when it comes to silver issues, but silver is tight. And we were talking off air about the level of sales that have leveled off in the United States, particularly when it comes to gold. And silver is roughly on par with the 2013 levels when you look at U.S. mint sales and so forth. But the Western press makes a big deal about those kind of things on the Western sales front, but at the same time, completely misconstrues what goes on with the statistics in China that are very, very opaque.
And there's been a big discrepancy between the sales volume in the U.S. and China. As you mentioned, Silver Eagle sales and silver demand here in the U.S. is tapered off. And again, historically, as Eric mentioned, we're still at high levels. We're still, this summer here, we've still been selling, the mint's been selling about 2 million ounces a month. It's about 29 million, let me look at the numbers again, 28 million for the year so far in Silver Eagles, which historically, that's one of the top 5 sales years on record through August. But it has tapered off here over the summer from the exceptionally strong demand we saw the first quarter of the year. It's nothing compared to what we're seeing in Asia. Shanghai silver stocks continue to plummet. Just in the last week, the physical inventories declined another 25%. I think just last Friday alone, there was 22 metric tons taken off the Shanghai market. So, as you mentioned, Eric, the physical demand in Asia continues to be strong, and that's a little bit different than what we're seeing in the U.S. as far as silver, but again, particularly in gold, where the U.S. retail coin demand in gold, and especially platinum, with the Platinum Eagles, has really fallen off a cliff. The Gold Eagle sales are down by about half from 2013, and the Platinum sales are just astonishing. Platinum Eagles, I think 2008 was the last year the Eagles were sold. So in March, when the Mint announced sales again for the first time in, I think it was about 6 years, there's quite a lot of press and publicity, and the Mint sold 10,000 Platinum Eagles, and that's dwindled down to almost nothing since. In June, the Mint sold 700 coins, 0 in July, and another 700 in August. So as Eric was kind of discussing with me off air, if this continues here, and there's really no indication that we'll see much of a change here in platinum, the 2012 year for the Platinum Eagles are almost a numismatic mintage, as there's been 13,000 coins minted here going into September.
Yeah, very, very low. Another point, too, to point out, yesterday's trading, we're recording this as our usual time on Friday after the market closed, but on Thursday we saw a pretty large spike in the pre-London Open hours in silver, and that just speaks to, you know, people getting ready to cover shorts and reposition their portfolios when the base of $19 appears to have held, and you know, so the hot money crowd is completely on board with the level of analysis that we were just talking about. So, you know, all of these kind of things just speak to the fact that 19 is likely going to hold with silver. And that's what the tail of the tape is showing, in addition. And then, of course, you know, the market managers came in and pushed prices down all through Thursday in the silver market. But even today, we're still holding in pretty tight around the $19.50 change, plus or minus 10 cents.
We don't talk a lot about the miners on the show here as we focus on the physical markets, but it continues to look like the miners are leading a coming advance in the precious metals. A lot of the juniors and the good mining companies are up really 25 to 40% off of early June lows.
Yeah, and the decline in, say, for example, an index like the JDXJ, which tracks junior miners, pretty much was, you know, on the order of 2 points or so. You know, it was trading in range just between 42 and 43 roughly for all of August, and then when we went through the latest decline in gold and silver prices, it only dropped about $2. So, all things considered, it's been strong through the decline. It led the rise up, you know, ever since the June 28th low in 2013, and has been, you know, very strong since the beginning of June, telegraphing this move that we've moved through, portion all the way up through about halfway through July. And you know, the call that I made when observing that silver was in the $22 range and possibly making a run to 25 or so, just because of the momentum shift and all of the cartel patterns that were failing at the time, showing that their managed retreat mode was in fact not even working at that point. So, you know, halfway through July, all of a sudden the cartel came very forcefully at the same time that we had the higher level of conflict going on with ISIS sweeping through Iraq in the month before, and geopolitical risks increasing in the Ukraine-Russian situation, and NATO being more belligerent, and on and on and on, all of the things that you would expect to push precious metals higher. Right at the same time that momentum move is happening, midway through July, all of a sudden the cartel came in to push prices down because they basically had to. But point being, the metals mining companies didn't decline that much when that happened. The metals themselves fell, but the miners stuck in there. And that speaks to more longer-term oriented money moving into the sector, taking their positions, and holding steady for what they consider a much bigger move that will require more time to flesh out. And that probably is also partly what's going on with the really outsized amount of contracts that are being held in the COMEX for silver. You know, there's quite a few speculators who are betting against the J.P. Morgans of the world and rolling over their contracts month after month and not backing down. And there's a huge long open interest where people, who knows, I mean, some people even have speculated that some of this might even be sovereign wealth funds and even China taking positions, vis-a-vis what is going on in the Shanghai market, where the stocks of silver available for delivery, and the delivery, in fact, occurring over the last year, has seen over 90% of the silver stocks in the Shanghai exchange being removed from their inventory system. So it's pretty amazing to see what's going on there. So, at some point, maybe the inventories will be so minimal in the Shanghai exchange that they'll have to go start sourcing from the COMEX, and we'll find out if there is in fact some smoke to that rumor about the Chinese being behind some of the COMEX long positions.
Shifting gears a little bit here, Eric, I know you've been all over the story at the news doctors here, and we discussed a little bit off air about the big geopolitical story this week with Ukraine claiming that Russia invaded it with 2 separate troop columns. So we'll let you get into the week's geopolitical update with the Russian-Ukraine crisis.
Well, everyone knows that Obama took to the airwaves, and his teleprompter was, speaking to America about how Russia has been escalating the conflict in Ukraine. And the Ukrainian government claims that full 2 tank columns rolled in, which is just not particularly believable given how many times they've actually made that claim before. And just to backtrack, I believe it was 2 weeks ago. Time flies, but the Ukrainian government first came out in the form of a parliamentarian claiming that Russia had sent over many columns and that 140 some odd armored vehicles were destroyed, and then none other than the Department of the Interior Minister in the Ukrainian government came out and debunked that claim, basically saying that we don't know why you're propagating it, and it's not true. And then 24 hours later, we had that major story where the aid convoys that Russia was sending over were claimed to be also transporting military gear and personnel and so forth, and then there were random inspections that were conducted and nothing turned up. So, I mean, the level of propaganda that's come out of the Kiev regime on similar stories that we're now being spoon-fed in the last 48 hours of our news cycle indicate that it's really wise to take anything that the Ukrainian government says with a huge degree of skepticism. All that said, however, there have been stories of Russian paratroopers who have been captured by the Ukrainian government forces, and that they, confess to being part of the Russian army, and they were there for training purposes and so forth. And I actually find those stories to be a little bit more credible, because that's the kind of thing that most governments do. I mean, the CIA is well known for putting in training forces to, like what they did with this ISIS group in Jordan. They helped train them. I mean, that's a dirty little bit of foreign policy, dirty laundry that doesn't make it to the mainstream press in the United States.
And once all the training's done and all the arms are sent over there and equipped, then it's time to go attack them.
Yeah, I mean, and, to some extent, U.S. foreign policy in the Middle East and Ukraine and all these colored revolutions are basically to take a stick and do a beehive, stir it up, make a big mess, and then, whatever happens afterwards is something that is opportunities to control the situation on the ground given the chaos. It's order out of chaos, as the old Hegelian dialectic concept is understood to be. So, bottom line with this latest batch of news stories is that it is escalating what's going on, and the UN Security Council met yesterday, and they were basically parroting the Western/NATO line, and instead of calling for investigations as to what happened with these reported military incursions, they just basically took the intelligence from the West and said, this is going on, and if Russia is in fact doing this, that it's a violation of international law and a grave escalation of the conflict. Well, these guys are supposed to be diplomats looking to defuse situations when in fact their rhetoric speaks otherwise. So, I mean, it's really unfortunate that all this is going on, because you have power play interests within the U.S. government and supranational-based interests, oligarchs and so forth, pursuing their own direct self-interests, and all of this is translating into a complete mess on the ground. So, like we said, when this kind of started evolving at a greater speed or last, spring, it doesn't look good. It's going to continue to escalate more likely than not. And when winter rolls around, any idea that the West can control Russia in an attempt of, slapping aggressive sanctions is just foolhardy, because the European continent gets 40% of its heating gas from Russia. When the winter comes, Germany and Italy, Spain, and so forth are not going to be interested in aggressive sanctions, because people will die in those countries if the gas doesn't flow. So, this is an interests are interested in fact, keeping it that way because it benefits, the military-industrial complex, the protection of the dollar, and there's a whole petrodollar aspect to this. And these are subjects that we've talked a lot on the show previously, so I don't think we need to go over them. And our audience knows pretty well what's going on too. But it's something to keep an eye on, and we'll look more deeply into the who said what and what in fact is going on when it comes to these so-called Russian soldiers crossing into the border, and report on it over the weekend at the News Doctor.
And the gas being shut off really is a potential big crisis issue for Kiev and the Ukraine, especially in a modern-day city. It's not like 100 years ago where everyone still has or even 20, 30 years ago where most residences still have a wood-burning stove or wood-burning fireplace. A lot of modern cities and buildings, they only have gas heat. So if they don't have access to gas anymore, I sure wouldn't want to spend a long winter in Kiev without any heat.
Yeah, and again, it's going to be something that Western European leaders will have to face their populaces when, in fact, if they go along with any aggressive further sanctions regimes, because the Southern European nations do get cold as well in Europe, believe it or not. And 40% of Europe's gas basically comes from the Russian gas fields. So there's only so much that they can do economically.
And then meanwhile, the Ebola crisis is beginning to creep a little bit closer to home. Again, we were just chatting before the show that upwards of 30 U.S. states are concerned that they may have the first cases of the Ebola virus, Eric.
Yeah, and they're making a call to the CDC to help them out with testing and monitoring of the situation. And the scary thing about this whole Ebola crisis is that it gives the perfect excuse for the U.S. government and other governments to just crack down on the free flow and travel of people, and basically gives a pretext for the rollout of a police state. And Ebola most likely will not be an order of magnitude type of pandemic like what we saw with Spanish flu or what have you, because it doesn't transmit quite as easily as something that's 100% dangerous at even reasonable distances of, say, 6 feet or something like that, as a vector of Spanish flu would be. But all things considered, it's still growing at an exponential rate off of a slow, a small case count. So, each month we've seen 30 some odd % growth of the cases in Africa, and if that is even only half of the rate that it would transmit in a more developed society, it still is something that can result in tens of thousands, if not maybe crack into the million range for people who are impacted. So it's a quandary, these risks are real, and governments around the world have to do various things to contain the threat, but at the same time, I am deeply concerned about what this will possibly justify when it comes to the knee-jerk reaction of powers that be in the United States and their predilection for police force control. It's going to probably serve as some kind of justification for that in the years ahead, maybe. I mean, hopefully it is something that will take a long time to develop so that the powers that be can control this disease, but who knows?
I do want to chime in just a little bit from my medical background in perspective, because I'm of a little bit different opinion than a lot of the commentators and those who have been making a big hype about the Ebola virus. Now, Ebola obviously is an extremely deadly virus. It's one of, if not the most deadly virus known to man. But as far as what we've seen so far, yes, it seems to be a little bit more contagious and easily spread in this cases than prior outbreaks. However, just putting the numbers in perspective, from what we've seen so far, I believe the last count I've seen, we're at somewhere around 2,000 global deaths from this outbreak since spring. So just kind of putting in the number in perspective, if you look at the U.S., the CDC's own data, so we're not even going to get into whether that's manipulated or not, or how accurate that is, but just the annual influenza seasonal deaths admitted by the CDC, and this is pretty much Any young Americans or any Americans over 60, the American medical community pushes that they have to get a yearly annual influenza vaccine. So that's a topic for another day. But just annual U.S. influenza deaths have ranged from a low of 3,000 to a high of around 50,000 in the last 40 years. So between 3,000 and 50,000 Americans die every single year from seasonal influenza, and nobody's in a panic about that. So just purely from a numbers perspective, 2,000 people in 4 or 5 months is less than we see die in the U.S. from an annual seasonal influenza, something that is extremely highly vaccinated against in the U.S. So from a medical perspective, I do agree that it looks like this is a little bit more deadly and easily transmissible virus than previous Ebola outbreaks, but it's pretty apparent from the media's reaction to it and hyping it as a pandemic that, number one, there's a lot of money to be made in the cure, and hyping it that you're going to need a vaccine for it. So there's a lot of money to be made in that, as well as some of the things Eric mentioned about it puts a pretext in place for whether it's martial law or hampering travel, basically cutting back on freedoms of Americans. So we'll keep an eye on it as the story progresses, but that's just kind of my 2 cents from a medical perspective.
Yeah, it's very important to keep all this in perspective because, I mean, the disease itself is horrible, and these symptoms are kind of like something out of a Hollywood, nightmare horror movie. But at the same time, we are talking about a small number of cases. I guess one other subject that we should probably throw in is that, the economic stats are always an ongoing laugh factory when it comes to what is produced by the Bureau of Labor Statistics and other departments in the U.S. But it's really interesting when you compare and contrast what's going on in terms of how, for example, the University of Michigan's consumer confidence numbers come out and the Conference Board's numbers as well, and they show some variation, which is interesting in and of itself, but bottom line is that there isn't that much exuberance going on other than what's tied to the stock market, and basically it's almost like this circular mirage that happens where the unemployment rate shows a decline, but we won't talk about how the labor participation rate is in fact falling because less people are able to find jobs in the long run, so they fall off the rolls and so on and so forth. But these statistics end up creating this kind of like circular logic where when you end up getting the consumer confidence measures, they show that most people are generally pretty happy with what's going on, at least according to what these stats paint. But then if you look at something that's broader in context, for example, the level of confidence people have when it comes to their ability to get a job and their prospects compared to a previous generation, the change that's happened in America in the last decade plus is just phenomenal. There, in the 1999 time frame, generations perceived their economic viability and opportunity going forward at a 54% approval that their generation would have better standing than the previous. Now, 2014, it's 14%. I mean, it's a 40% decline. And those are the real stats that speak to where the American public truly sees our economic outlook as opposed to these government statisticians that somehow manage to get their circle jerk going with this information flow. So, it's important to point all this out because to a very large extent, the numbers that we get for consumer confidence are painted by the stock market, and in turn, the stock market is a dog and pony show that's being inflated by all of the monetary largesse, as well as corporations now even buying back upwards of close to $1 trillion of stock in the last 12 months, borrowing low interest rate money to purchase stock directly for their corporate treasury. And this speaks to what we address a lot on the show, and that's that what the mainstream paints as far as our economic picture is really just an illusion. And at some point, given the low volatility we have in the stock market, the fact that the credit markets are continuing to get artificial bids from places like Belgium and other means of derivative structures that are pumping up our bond market. I mean, it's just strange that we have bonds, in the 10-year slicing through 2.3% and, continuing to fall and on and on. It's a contradiction. How can the powers that be paint the economic backdrop as being so strong, yet the bond market's rolling over, the oil market's rolling over, et cetera, et cetera? I mean, the truth of the matter is that the bond market and the oil market are speaking more truth than the statistics that come out of the PLS.
Well, right on cue as Eric discusses the dog and pony show that is the U.S. media and government. Eric's dog is letting us know that Labor Day weekend has begun, so get his buddy out here. So we'll look to see if the volatility increases a bit and we start to see some action in gold and silver as traders return to their desks as the summer is pretty much over here after this extended Labor Day weekend, and all the big traders and banks return to their desks Tuesday morning. It's encouraging here that, again, silver did find support and held it throughout the second half of the week at 1940, and gold also refusing to break down below the 1280 level. That's pretty crucial as well, and trading up off of it here on Friday to close the week just under 1290. So we'll look forward to the fall and winter. I think Eric and I are both of the belief that we could have a nice rally in store for the metals here.
Shanghai Exchange is also going to open up on the 26th, reportedly, and they're going to be shipping physical delivery gold anywhere in the world, not just for China's market. They're trying to really expand the physical gold market, and basically, in the long run, what this means is that the price-setting mechanisms that have been enjoined by the London and COMEX exchanges for all this time will shift to Asia, and it's not clear how long that's going to take in full, but it's going to happen. And that is far more important than, say, the silver fix, for example, going under a reform. These are the forces that will, in fact, diminish the cartel's power to manipulate markets over time.
So traders have been lulled perhaps a bit over the last month with really not too much action to the up or the down in gold and silver over the last 4 to 6 weeks. But don't be surprised if that changes in a big way here as the fall begins. So we hope all our listeners have a great Labor Day weekend. We'd love to hear your thoughts on the new Silver Doctors release and your thoughts on the new site. So feel free to comment in the write-up section of the post. So enjoy your weekend, get away from the markets for a couple days, and be ready to start fresh come Tuesday. I know I will be. So for the Doc and Eric Dubin, thanks for tuning in to the SD Weekly Metals and Markets.
Those individuals who are in charge of monetary policy around the world, I think they're very much aware of what is coming. When I've asked Federal Reserve Chairman in the committee about this, they never said, no, that's not going to happen. They use the word orderly. As long as it's orderly, it seems to be okay.